I'm back. I'm back for the Earnings All Stars videos because first quarter earnings season is about to start this week. And I know a lot of other things are going on with the tariffs, but we should be focusing on the companies now and the earnings reports because they're going to tell us how badly they might be impacted by the tariffs, if the tariffs even stay on long enough for them to be impacted. So where do we begin in this first week of earnings season? Yes, we're getting the banks, but I want to look at other companies outside the banks for this video because those are the ones who are going to tell us what's going on out there, both on the tariffs and also on demand side. So we are going to kick it off with Delta Airlines. They always report in this first week. They're the first of the airlines to report. They've already kind of warned about what's going on out there with bookings. All of the airlines have really. And we are seeing a pullback on the commercial side because government contractors are no longer flying all around. They've gotten their budgets cut or frozen. So that is impacting the airlines. The consumer side seems to be holding up a bit better. A lot of those trips for the first quarter have already been booked as of last year. When the stock market was up, people were feeling pretty good. But my question is going to be, what is summer looking like? I wonder if a lot of that has already been booked and going forward from there. Are we all still traveling to Europe this summer and into the fall, or are people getting a little jittery and canceling that? So let's take a look at the Delta chart to see what's happening on the earnings surprises, because that's what we care about for the Earnings All-Stars. And as you can see, it's been a bit choppy. It always is really with the airlines because they've got a lot of things going on. So we normally don't see, 5 years in a row of beats with some of the airlines, but Delta is a pretty good earnings surprise track record. Did have these two misses last year, but came through with a 5% earnings surprise. You can see the impact of the tariffs here and just the jitterness of the pullback possibly by the consumer and on consumer spending. And so these shares have come all the way down. Over the last month, they're now down 27%, PE of just 5.5 now on Delta. But people really don't want to be owning the airlines if we're going into a recession or some other kind of big consumer slowdown. It may or may not result in an actual recession by the numbers. But if the consumer is really going to pull back on travel after all the revenge travel that they did during the pandemic, then I don't want to own the airlines. So we'll see what happens with Delta this week, but they are going to be a bellwether for a lot of the travel stocks. Then let's take a look at spirits with Constellation Brands. And this is one that could get hit by the tariffs. So you can see they did have an earnings miss last quarter, but that was just in early January. Not a big miss, just 2.7% there. They've had a pretty good track record otherwise, just the other three misses, and two of them were during the rough parts of the pandemic here in 2021. So what's happening with Constellation over the last month? It's down just 2.5% because most of this sell-off was priced in as of the end of last year. And then we actually did get a bounce here. So we'll see what happens with the stock. It is a lot cheaper, trading at just 12.6 times forward earnings. But will it hold on to those earnings? That's going to be the question. We're all waiting, and maybe that's why the stock isn't really going up or down. We'll see this earnings season. So that's Constellation STZ. Then I wanted to take a look at CarMax. They're reporting this week to lead off earnings season. Normally, I don't do CarMax. I've pretty much ignored them. They don't have a bad earnings surprise track record, kind of hit or miss like Delta. They had all these misses here in 2024, but turned it around last quarter with a big surprise of 30%. Now, why am I more interested in CarMax? Because this is used cars. And with the tariffs going on car imports, which are about 50% of the car market, they're expecting new auto prices to rise anywhere between $5,000 and $10,000. Supposedly, we'll see as we go along with these tariffs, but they do expect the price to rise in some way, some fashion. So I may be going out and looking at those used cars because the prices will be lower there, but everybody's has the same thought. So used cars prices are also on the rise. And that may help CarMax a bit, at least on the margins, but then maybe it won't see as many sales. So a lot of things up in the air, even with the autos, and we'll see how many car sales were pulled forward in the last couple of weeks in anticipation of the tariffs, even on the used car side. Now, we have seen the interest rates or the 10-year treasury come down off of its recent highs. It was briefly under 4%. Hopefully we get a little bit of relief on the loan for the interest rates on the loans for cars, which has been quite high as well. That's been impacting the auto sales as well. So over the last month, the shares are actually up just 0.09%. But PE is at 19.5, so not altogether cheap here. And we are still stuck in this narrow trading range. So we're not really seeing the big sell-off from the tariffs like we saw with Constellation and Delta. So I'm on the sidelines with this one, but we all will be tuning in to see what they say. Then one of my favorites on the manufacturing side, of course, we have covered it almost every quarter, Fastenal. FAST is the ticker. They are a bellwether for manufacturing. They are the fasteners. They also do some of the masks and things for construction sites, but which were also used during the pandemic. That demand has gone away now. So we're relying a lot more on the construction side, which has been solid. We have the big infrastructure plan from the Biden administration still in effect. We have the AI data center build out. Other construction has been quite robust outside of, say, residential real estate and some multifamily that has pulled back. But manufacturing in general has been at least on the upward track recently. And now you can see that Fastenal's kind of reflecting this. They've got a great earnings surprise chart, just two misses, including last quarter. I was surprised by this miss because otherwise they just had the one here in 2024. Will they turn it around? They did for 2 quarters last time when they had that first miss in all those years. And so I'm thinking they will do it again here. Over the last month, the shares are down 5.8%. That's not a big sell-off. They are still really expensive. I was hoping to see a bigger sell-off in Fastenal because that might go to market capitulation here on this tariff sell-off. But we're not really seeing capitulation here, maybe because they think that with the tariffs, some more manufacturing will be moving back, and that's a positive for their business. But again, all these balls up in the air, and so we won't know for months, maybe even years, the total impacts here. But PE of 34.5, that is expensive for me, even though I love Fastenal and its business model. It's just a little too pricey for me. But let's see what they say and if they give any kind of guidance on tariff impacts. So Fastenal, FAST. Then we're going to wrap it up. Yes, I am finally doing a bank on the week that the banks are reporting. It's JP Morgan Chase. Let's go with the best of the best always. Shares were at new highs earlier this year and have really fallen back over the last month, down 11.5%. But I feel like the stock did get a little pricey, even with this great track record. Last miss going all the way back to 2022. So they've just been on the upward slope. They've been executing. The economy is starting to heat up, or it was. So that was on their side. But remember with the banks, it's not really about PE. Their PE is at 11.7. It's really about price to sales. No, it's about price to book with the banks. And I think I did price to sales. Let's see on the price to book. Price to book. Here we go. 1.8 is the price to book. I was looking at the price to sales, thinking it got too expensive. Well, this is on a little bit of the pricier side, even for a bank. Because remember, the bank analysts always say you buy at a price to book of 1, you sell at 2. It's at 1.8. It was getting a little pricey here and getting more onto the sell side. So maybe that's why we're seeing some selling. It was a bit stretched. And now we got the tariffs, the uncertainty, possibility of recessions. Who knows what may come down the pike, but people are selling their big gainers, locking in those gains. But that provides a buying opportunity for the rest of us who weren't in this name to maybe get it cheaper. Of course, we'll be watching all the rest of the big banks that are reporting, some at the end of this week, some to start next week. And then we're going to get the regional banks. They've also sold off really hard in this market downturn. I think the selling has been overdone on all of these banks, unless you believe there's going to be a strong recession coming. And then the bank earnings will get hit during that as the economy slows. So again, a lot of balls up in the air. We're going to be watching all of these stocks all week long, as well as the Mag 7. They're coming in the next 2 weeks. I'll be back with some more charts on all of them. Maybe we'll have a little more clarity, but I doubt it going into those numbers. So a lot is going on. You want to be sure to subscribe on our YouTube channel to get all of our videos. You'll get the top stock picks. You'll get these earnings all stars. You'll get my podcast. You'll get the Market Edge there, where we'll talk about more stocks and whatever else is going on in the economy. Be sure to get us on YouTube. Again, just go to Zacks.com/YouTube or go to YouTube and just put in Zacks Investment Research. Subscribe so you don't have to think about it, but get us somewhere. And I'll be bringing you charts on my Twitter and Blue Sky feeds, as well as stock twits all throughout earnings season. This is an important one. It's looking backwards on the actual earnings reports, but we're hoping to see some guidance. And will it be cuts to earnings guidance or not? And who will come out ahead if there are cuts coming? Because there will be winners even in tariffs, even with that going on. So be sure to subscribe to get everything. And I will see you again next week with some more earnings charts.